Call the Administration and Finance Committee meeting to order. All 5 members are present. Can I have a motion to approve the minutes as
So
listed?
moved.
Second.
All in favor, say aye.
Aye.
Opposed? The ayes have it. And then moving on to item 2, an ordinance to establish the salary of the mayor of the city of West Allis.
Mr. Chair.
Yes, Ms. Grill.
Since the meeting last time, there's been an update to the ordinance. If you would accept it as an amendment, it's a 2%, which is commensurate with what employees would be, what you'll be considering later for employees this evening.
So it's 2% per year, so it's consistent with the employees. Okay. And I realize I don't have the jackets. Does anyone know where the jackets are? Are they maybe,
Steve, probably,
yeah.
yeah.
Thanks, Tony. Or maybe they might be at my seat on the council dais. I don't know.
Mr. Chairman.
Yes, Alderman Chapletsky.
Okay, now, anybody can correct me if I'm wrong, like I have to ask for it. But when we hired a city administrator, the mayor got less duties. Day-to-day operations of a city administrator and less mayor. So why would we be giving the mayor a raise? The mayor's position now. And we're talking about position, not the person. I don't understand it. If anything, it should probably go less.
Yeah, and to respond to that, yeah, Alderman Chapletsky, I understand what you're saying. I think that the mayor's position, though, is one where he certainly remains busy as the cheerleader for the city. He's done lots of things. He's expanded, and I'm talking personal.
Right.
I don't mean to be personal about the individual mayor that we have, which I think we all agree is a very good mayor. I'm talking about the position. I think that the mayor's position has changed from more of a boss, a supervisor, to one that is doing more things for the city. That'd be the start of my answer.
Mr. Chairman.
Yes.
As we all know, being,
Where were they?
politicians, anybody can do as much
Okay.
or as little as they want. Like any alderman can do as much as little as they want, and so is the mayor. This is for the position. We don't know what the next mayor is gonna be like, or what the person's going to do. And I just think that if you just look at logically, there should not be an original. Truthfully, there should be a cut, but I'd go along with just no raise at all.
Mr. Chair,
Alderman Weigel.
by way of reference, what's been the history on the salary in this position? I know ours has been pretty much frozen for the last 10 years. Was the mayor's position in the same? I mean, historically, had it been in the same boat? My concern is if we get too far behind, that eventually nobody really qualified would want to become the mayor. If it's not paying, I mean, it looks like it's paying a fair amount now.
Mr. Chair.
Yes, Ms. Grill.
In 2010, the salary was 60,000. 2011 went to 62. Stayed there for 2000. Let's see. I'm sorry. 2009 it was at 60. 2010 62. 2011 62. 12 63. 13 64. 14 65. 15 66, and then it went to 67 320, and then that was a 2%, and then 17 it went to 68 666, which was 2%, and then in 18 to 19 it's at 70. It was at 70 039 73, and then April of this year it went up to 71 440.
So it had been running under 2% and then a little bit, then about 2% a year on average.
Yeah, Mr. Chair,
Alderman May.
to answer that question, because I actually asked for all the numbers going back to, I think, the late 80s, early 90s. It had been approximately 0.5% to 1% for a number of years. I think this last term, it was around 2%. And then it was originally showed as 3%, and I said, no way to 3% because our employees don't get 3%. I don't think public officials should get any more raise than our employees do. So, at 2% with the, again, it's coming up later, 2% for our employees, at least that would be on par. But to Alderman Chlesky's question, the duties of the mayor, are they technically in charge of the tourist commission? Are they the head?
He's the head of the tourism commission, so that's a new position in the last couple of years.
And I think the last couple of years, I don't think we've given our employees 2%. Are we gonna give them 2% going in the future as well?
We
We don't know
can't
what
speak
next
to
year.
that. We have to figure out what's going to be going on with the state and different things and what we have here, so.
Can I ask, is there a reason why we have to approve it now? Couldn't we do it during budget time when we see what we can give our employees? We're saying today our resolution is gonna be 2%, but we know that that can fit in the budget with all our other commitments.
I believe it only has to be done in advance of, in December before people file, so it certainly could be done as part of the budget.
Can the budget right now, as you see it, I know it's early, handle 2% for everyone?
We don't see it yet.
Don't see it yet?
We're not that far.
No.
We're just
Just because
really,
timing, not that, yeah.
Correct.
Well, we can hold off then, would be my, Mr. Chair.
Sure, Alderman Rowe.
you need to say something?
Any adjustments to either alderperson or mayor salary would have to be done before December 1st. That's the hard deadline.
Yep.
So just want to make
Because
sure
of the
that's-
election.
The nomination.
So-
Because it's the first day for nomination papers to be circulated. So that's the hard deadline.
So when we would probably adopting would be November 19th, so.
That would be the last regular meeting
Yeah.
that would be eligible to make the decision.
So there's two ways we could go. One, wait till budget time, see what we're giving the employees, and put the mayor at the same or less. And or put everyone at 2% now for the budget planning, with the understanding, we may change it before December 1st to match what our employees get. Does that make sense? What's the purpose to get these nailed down now?
So just so that we have them and we
For
can.
planning?
For planning, yeah. We just don't wanna get it lost when we're working on the budget, but if we're gonna do it as part of it, certainly we can do that.
You just need some direction as to what number to plug in as you go through the numbers, right?
Mr. Chair,
Alderman Weigel.
I'd be in favor of just giving right now guidance of 2% and waiting. Maybe not waiting till December, obviously, you know, but take it up when we have a firmer grasp on exactly where everything's gonna be. If that's okay, is that a ton of extra work for staff? No. It's just sliding work that could be done now into a busier season, I guess.
This is just typically the time that this has always been done, so.
And I'm not opposed to keeping it with the employees, Eric, but again, I just have a hard time if we give elected officials a higher percentage than we give the employees. I think leaders should take the same or less, so. And I've conveyed that to the mayor. I don't think that any of that would surprise him, so.
And Alderman Rowe, you had wanted to say something before and we skipped over you and I
Oh, no,
apologize.
It was about the election, I think I said that to Kale.
Yeah.
And why not hold it until, sounds like November 19th would be a good day.
So yeah, the consensus is to hold this item then?
But for budget planning, plan on the 2%?
Okay, very good. All right. Then moving on, item 3, an ordinance to establish the salary range for the municipal judge of the city of West Allis.
What percentage is that as well?
I believe these two, that is remaining flat. The alderperson and the judges are remaining,
Remaining flat, unchanged.
that's the recommendation before you this evening.
Mr. Chairman,
Yes.
what's the recommendation?
It's sponsored by the Administration and Finance Committee, us.
And we actually talked about it.
Of course,
No,
no.
this is the time to
This is
talk
the time to
about
talk
it.
about it.
Yeah.
I was wondering, I haven't heard.
I-
No,
there-
you said, when you saying the recommendation, I was like, wait a minute, I don't remember any recommendation coming
Yeah.
from.
Oh, there has been some discussion with other people that I've had the opportunity to meet with, so I've gotten some input, but, so that's what I'm meaning by that.
Mr. Chair,
Alderman Weigel.
I'm gonna bring up the same thing that I just mentioned relative to the mayor's salary. I mean, if, look at historically where we've been, and we know where we ended up with the police department, when we're underpaying relative to the market, that eventually we've underpriced ourselves out of the market. Now, I don't think anybody here is really here for the money, right? I mean, but the point is, if and am I correct in understanding that our salaries have been essentially frozen for the last 9 or 10 years?
2010,
Yeah,
it's been 73.84
okay.
since then.
So there may come a time that new people are thinking about running, it's like, oh, it only pays $7,300 a year, you know, and we want engaged, educated, interested people for this position. And it does take a time commitment.
I don't qualify anymore.
I didn't say we're changing to engaged in. So that would be an argument for something. And I do remember, I think that when we froze our wage, because we were in the middle of a recession and we wanted to lead by example, which I think we were able to do, 10 years without a raise.
And add to what you're saying, Alderman Weigel, is we gave up our health insurance.
Yeah, it's changed
That's a
drastically.
huge deal for many
Give
people.
it up, he's gotta pay more.
Yeah.
Yes,
And I-
yes.
That's the point that I was gonna give to Mr. Chairman, is that Alderman did give up something, so, 2% for that, I think would be adequate.
Okay.
Well, right now, we're showing 0.
Yeah.
Right.
So what do we want to do?
I've always thought we should be at minimum wage, 725 times 0.5, it's a $150 bump, I think. But
That's
but
what
I'm
it
not
went
gonna
up
fight,
last
I'm not
time.
gonna fight over 150
Yeah.
bucks.
I think that's where that number is, yeah, 725 times 20 hours a week.
That-
Isn't that where it comes from?
It's short, I think it's about 710 right now.
Oh, okay.
So 7540 would be,
See,
725.
Alderman May, you're on top of it. All right.
That's why I sit next to him.
calculator.
All right. So, yeah, what does the committee want to do?
And has the judge had any input on his?
Yes, I've discussed that with him. He's comfortable with this, but there's also consideration of the health insurance for his position, so, that might be something you would wanna look at also.
And again,
Also looking at his but we haven't really looked at the responsibilities of the court for a while either, we haven't done any comps for that, so I could look at, I don't know how many municipal courts are like ours, but
Yeah.
Mr. Chair,
Yes.
and if I could, we're in the same position with the judge. If the time, Judge Murphy won't be with us forever, and the time will come when we're gonna have to try to find somebody to fill that, and that's a different kind of position that should pay well, I think. So, it shouldn't just be somebody with nothing better to do. A qualified person.
Yes. Right, you need to pay money to attract talent.
And so what to do, right?
Yeah.
Well, and all of these can be really handled in September, let's say, right?
Right?
certainly it would be helpful to have guidance, so as we're doing the
Yes.
calculations for the budget, we would have.
Mr. Chairman. Do we have the background of what the judge paid? His pay has been going, no, I don't know how that's going.
I don't have the percentages, but, in 2010, he was at 22.84 biweekly. 2012 went to 23.29.80. 2013, 23.76.60. 24, 24.60. 2015, 24.73.20. 16, 25, 22.66. 17, 25, 73.11. 18, 26, 24, 57, and then 19, 26, 77, 06.
So it has been going up progressively.
So that's, to me, that looks really low. Just shy of 70,000 a year.
Yeah.
I'd be curious to get the comps on that. Because he's considered a .9 employee as well, right?
No.
0.75.
0.75?
Yeah, and that could be looked at too, how much the workload is. I think that's changed somewhat too.
So then
So we
that's,
certainly could look at that.
that's equivalent to about 93,000. If it was a full time.
I think we should find out that information, get back to us with it.
Okay. And for planning purposes for the older people, or just,
I'd say
A
plan
best
on minimum
guesstimate.
wage.
Yeah,
Okay.
Mike's gonna get us a bump then.
Yeah.
$40.
$150?
Yeah, yeah.
But I think we can get this done before the end of the summer. We don't have to wait
Yeah, it
till.
doesn't.
Yeah,
Yeah, no, we don't have to wait
That's
too
right.
long.
With all
We
the
don't have to wait till
positions.
November, right?
so the first meeting in September,
The first administration finance meeting?
What is minimum?
yeah.
Sure.
725.
Is that what it is?
Okay.
Okay, so we're gonna hold items 3 and 4. Let's see if we can find something that we can pass. How about a motion to place number 5 on file?
So moved.
And number 5 is the resolution to approve the use agreement between the city and the school district regarding McKinley Park. And so we have a motion from Alderman Weigel. Is there a second?
Second.
A second from Alderman Chaplesky. Any discussion? All in favor? Please, yes.
Yeah, this is just to be placed on file.
Just to
so
be placed on
they
file.
are pursuing other opportunities.
Okay. And any further discussion? All in favor, say aye.
Aye.
Opposed? Okay, the ayes have it. And then item 6 is a communication from the city assessor providing the 2019 assessor's office report. Hello, Jason. Hello. You.
Hot off the press. You got that.
I can pass it, Jason.
Thank you.
After you already came around. Thank you.
Thank you.
So, what I just handed out here is a summary of the revaluation work that we've done. And the first page and part of the second page just gives a summary of that. It gives the justification behind why revaluations are done, law that requires assessors to do this type of work. And then following that, I go into a summary of numbers, how numbers have changed, how it's affected residential and commercial properties, personal property, and then I end with summaries of our open book process and the board of review. So the way this was presented is an alderman wanted me to come in and give a brief presentation on this type of information. So if you want me to take the lead, I can start working through this document, or if you want me to jump to something specific.
Well, I just,
Alderman Chaplesky.
Mr. Chairman, I just, well, I was answering his question. A lot of people are seeing me on the street and complaining about their assessment is skyrocketing. There's one that went from 183 to 296 on Greenfield Avenue. There's no way that building's gonna sell for $300,000. He's got a business that isn't even a retail business. He's got a wholesale business. He doesn't even open his front door. He got a vacant, he's vacant upstairs in his property. And then I've been hearing about all these other properties. And I just wanted to know justification. Now, in talking with you, you said, well, they haven't been done right and we haven't gone up, but property hasn't gone up that much in this city in that short, I mean, even if it's been going up all the time, it's still not worth 300, and seeing what sales are in the area, it's not going up that much.
Right.
And so I just want to know how'd you come up with that particular price on some of these properties?
So we'll start there.
I realize there's a lot of different properties and probably different reasons.
So we'll start there. There's two things that we can talk about that will help explain that issue. Going to the one point that you brought up is that the previous records that were in this office were not reliable. There had been so much manipulation and changes, unjustified changes, that it reached a point where the records could not be used. So that prompted the revaluation work. And the revaluation work includes full interior, exterior inspections. So it all started with sending out letters to all commercial property owners saying, hey, we would like to come onto your property and inspect it and rewrite our property record card. So of the 1,700 commercial properties, 1,047 gave us permission to enter their property and to do an interior inspection. So that allowed us the opportunity to get in the building, observe condition, update the property record card, take pictures, draw new sketches, things like that. So that process was that started in July of 17 and it ended towards the end of the year of 18. So through that process, we were able to go through and rewrite property record cards for all the commercial properties. So now we have good data going in that we can work with. So in that regard, a lot of information that hasn't been touched for a long time got updated to what was observed currently. So the difference in value changes, whether it was an extreme high or an extreme low or somewhere in between, that is the manifestation of having poor records to begin with. Some properties were underassessed, some properties were overassessed. So now to bring them all in line with what we're seeing today, you had to bring everyone down or up to get there.
But the majority, obviously, the majority went up.
Yeah, the majority went up. I believe 60% of the commercial properties saw an increase in value of varying degrees. So 40% were either no change or very little change or down, 60% up. So the way to think of it is it was chaotic before, and now we've restored order to the records.
Okay.
It may
To the
not
record.
It may not seem
Not the
like
people.
that,
The people are more chaotic now than they were ever.
but going forward, you would expect to see a more even change in values across the board because now we're starting with a new baseline of information. Okay, so that's the first part of the answer. The second part of the answer is what we did is we constructed income models and applied the income approach to value to commercial properties. To accomplish that, building a model like that, we did an income and expense survey of West Allis. So we sent out surveys in February asking property owners to give us information about their rent, their expenses, their vacancy, any kind of leases, any kind of information like that. In conjunction with that, we also did our own independent research into looking into third-party vendors like CoStar and MLS and Catalyst and all of these third-party vendors that provide information about rent, expenses, and vacancies specific to West Allis. So for example, you can go into CoStar and you can look at all of the office buildings that are trying to lease space. And you can export that into an Excel spreadsheet, create a pivot table, and start slicing and dicing information based on age of building, square footage.
Statistical
Yeah.
analysis, basically.
And so you can start to zero in on what office buildings or apartments or mixed-use retail rents for in West Allis. So that's where that data came from. And then what you do is you punch that into a model so that if you have a property that's an 8-unit apartment with 8 two-bedrooms, it goes to your model to find the typical rent for that type of property, and that's how the valuation is built from. And the same thing happens with an office building. And the same thing happens with, say, a mixed-use property on the east side of West Allis. It's going to draw typical retail rent, typical apartment rent. When I say typical, I mean for West Allis. This is very West Allis specific data that is fed into the model. So that's how we valued commercial properties in the city of West Allis. So then we had the open book period from June 18th to June 25th, and we received overwhelming feedback from the bid and what we call the settlement mixed use district. And essentially what that is the east side of the city, older mixed use properties along Beecher, Burnham, Greenfield, National, properties that were built, say, around the 1920s, 100-year-old buildings. And they're saying, hey, you guys have our rent way too high. You've got us at $13 a square foot. I'm lucky if I can get $8 or $7 a square foot. And so we took a closer look at what was going on. Well, when you go to these third-party vendors and you look at current active leases, those were the properties that were driving the values in this model. And those are transactions that are happening. They're taken from an active market. Well, a lot of these older properties, they're not active. They've been sitting there. So we learned through that process, okay, there's really two types of properties. There's the ones that are active, there's turnover, it's creating data that can be reviewed, but then there's these other properties that there isn't much data out there that's available. So we took a second look at that information, revised the rents downward, and then we issued letters. They're called by the way letters. And it's through the open book process, information became available that helped us fine tune our model. And we've now revalued and sent you a new assessment notice.
But how many did you send out?
206. And they were all in the settlement mixed use district. So a lot of those properties that I just described, the 100-year-old ground floor retail office with apartments above. And I think what we could say about that is the apartments are doing very well, but that ground floor commercial not doing so well. And so now the model reflects that reality in the market. So you have two things going on. You have correction of old records and creating a new baseline, and then you have a model that was overstating a certain subclass of property. And I don't say subclass in a derogatory way. There's just different classes of property. So we sent those letters out, and I believe 2 of those owners were not happy with their new numbers. They went through the appeal process. One is active and being heard tomorrow, and the other one, we were able to get additional information about that property and resolve that issue. So a lot of stuff got stirred up in this process. I was expecting it. It's actually been a little more mild than I had expected. It's been somewhat smooth. Overall, through this process, we've had contact with over 300 property owners, either through phone, email, walk-ins, open book appointments, and we've had 61 board of review cases. I don't think West Allis has ever, that is a record. And that's good. That's a good sign because it means that the process is working. Property owners are appealing their value. They have their day in court, so to speak. To not have board of review cases is a red flag. I'm kind of getting off on a tangent here, but
You told me there's 3 different ways that you value a property.
Right.
One is the one you just said,
Correct.
where it's by the rents they're taking in. How about sales? That's the other one.
so
To me, that's the one that would mean the most, because you can put any value you want on a property. If that owner can't sell it for that property, it's not worth it. It's only worth what you get, what you sell it. You know, I always give people the example. I used to have a Jaguar XE. Everybody says it's worth $25,000. I got $15,000. I had to drive it to Chicago. It was worth $15,000. And so whatever you say it's worth, or whatever you think it's worth, isn't necessarily what it's worth. what the market value is, what you can sell it for. And
So,
go ahead.
well, there's three approaches to value. There's the sales comparison approach, as you described, the income approach that I previously described, and then there's the cost approach. And depending on the property type and the age and when it was constructed, or how the property is used, is it rented out? Well, then income approach is gonna be the driving factor for that. So in the case of these older mixed-use properties that generate income somehow, whether from apartments or the retail office component, there's going to be income and you are going to value it based on that. But then also, like you said, what is someone going to pay for that property? Well, if it's an income producing property, they're going to pay for the income, the stream of cash flow that that property can generate. So if your rents are in line and the vacancy and the expenses are in line, you would expect to see the sale price to reasonably match or come close to the income approach. So I don't know when a lot of these, the calls and contacts were made with you, but if they're reacting to those initial assessments, then I can totally see that argument. But now that we've revised them to reflect commercial rents closer to what they're likely getting, then I would expect those values to more closely match what you expect to buy them for or sell them for.
When you look at the income, do you look at leases rather than they're just renting out with no leases?
Well-
Because you can go in there and they can have the whole building rented, and next month it could be empty if there isn't a lease. And if you're buying a building, obviously if you got 3-year leases in all the apartments, you know, yes, the building probably is worth more than a building that, you know, you don't have that.
So what we ask them for is a 3-year operating history so that we can see any trends in vacancy and expenses and rents. If we get that, that's really good data for us to base it on because we'll look at the average of those 3 years. Sometimes they only give us 1 year. Sometimes we just get one lease and they don't want to share the other information. So when we don't get that other information, we have to look at, say, CoStar and look at what properties like that are leasing for. So it's almost like a historian. Here's your evidence, here are your artifacts. Now you need to string together a narrative to explain what Caesar did 2,000 years ago. So if you've got one lease and you've got some listings for that property type, and you know the vacancy rate of that property type, you can start to piece together a reasonable spreadsheet for that property. More to your point, if we come across a property that has a high vacancy rate, then we would factor that in to having a higher vacancy rate. So a lot of these properties that have been vacant, say 50% or 100% vacant, we have a model and a calculation that factors that in, and that gets entered into the model. So that long-term high vacancy rate was also built into this revision. So that captures the higher vacancy. The lower rents captures that. So the model is you take the square footage times the rental rate, and then you apply a vacancy factor to that. And that vacancy factor takes into account turnover. You lose a tenant, it may take you several months to find a new one. You may not get a tenant for quite a while. It may sit vacant for an extended period of time. So that extra vacancy factor captures that scenario. And then from there, you subtract your expenses and you end up with a net operating income that you apply a cap rate to.
It sounds to me though like that was the main way that you figured the value of a property rather than sales.
Well, for the model, for the mass appraisal model, yes, with a few exceptions. The exceptions were restaurants, especially the fast food restaurants, because a lot of those sale prices include business value, and it's very difficult to separate real estate from business value. I believe there were some owner-occupied properties, especially warehouse properties. We used the cost approach on that. So properties that produce income, that is what investors are gonna look at when they're determining how much they're gonna offer to pay for it. So those income, the value based on an income approach is going to be, should be very close to what they're gonna pay for it. If an apartment building is gonna generate a net operating income of $10,000 and cap rates are 10%, that indicates a value of $100,000. Are you gonna go pay 150 for it? No. You're gonna pay 80 for it? Are they gonna sell it to you for 80? Probably not. So you're gonna find somewhere through the negotiation, somewhere close to 100,000.
Okay, on one of the properties that we're dealing with through the city, through development, there was, I guess it had a $1.2 million value, and it was up to 4.4,
Oh, yes,
and then it was lowered to 1.3.
right.
I mean, what, that kind of threw me. What,
So that was the Weir Steel building. We sent them an income and expense survey. They did not respond to that. So and I believe we did not get permission to do the interior inspection, so we weren't able to get into the property. So in a situation like that, you have to make an assumption that it's fully occupied, it's leased out, and then you apply those rates from the model, you apply the standard vacancy to it, and then you generate a value. And it came out as being over $4 million. Then ownership contacted us.
I'll give you my data, I'll give you my
I'll
data.
give you my information.
Mr. Chair,
And,
101st and Lincoln we're talking, correct?
correct.
Okay.
So we got their attention. We got the attention of their attorneys and an appraiser. So we got a whole team of people contacting us now, telling us all kinds of details about the property. So after taking a look at the valuation and then considering,
noise in
you know,
there?
from my perspective, there's proposals for TIF developments, but until the rubber hits the road,
But I'm saying just based on the value that we were talking on the property, you know, and so what the city had it assessed for, I don't even know how much they offered them for it, you know, but and then all of a sudden, when it jumped way up, all of a sudden we thought, oh, now we're gonna have to raise the TIF or these things, and that's why I was concerned about it, but.
and hopefully several people in this room can attest to this, I try to really keep a wedge between myself and those TIF discussions, because my concern is value, not
Right.
making a spreadsheet work. So, you know, that's,
Well, it was the extreme jumping that concerned me.
well, when you're looking at thousands of properties and it's in a mass appraisal system, and if the owner's not gonna give you information, you have to make these assumptions. And that's what happened in this case. But once we learned what was going on with the property, we changed it.
Is that information, if a landlord gives you all their information on all their leases, how long, how much area, is that public information?
No, it's confidential. So if they give that to us, we mark it as confidential. We do not present it. In fact, at the board hearings this past week, we don't present that until the owner brings it up. And once the owner enters it as evidence, then it's open.
Yes, right.
Yeah. And we tell people that. We did have one person in particular that was very concerned about that. And I assured him, we don't share that. If someone asks for it, we're not giving it out. So,
Alderman May?
In short, you have a model, you calibrated it to the economic conditions of the city, and through the board of review, you're validating specific properties like the Weir Steel to make sure that it's proper for that individual property. Is that it in a nutshell?
and through the open book process.
Right.
This is all designed to further refine the process. You start with the model, you test it. You calibrate, you test it, you try to fine tune it as much as you can, and then you have the open book process that allows the property owners to come in and say, hey, you're wrong. You need to consider this. I think in this city, we just haven't done this process, so it's a shock to a lot of people. I mean, even our board of review is like, I can't, how many cases are we up to now? And they're loving it. I
They're
think
not getting paid either.
No.
Waiting.
So, this is a very healthy process to go through open book and board of review and
Well, it depends where you're sitting, whether it's a healthy process. If you own a building that you say is way valued more than you want, now you gotta go out and hire somebody, you gotta get an assessment on it in order to fight it. So it's like you're guilty until you prove yourself innocent. I just wish there had been more weight put on sales, because that determines more than anything the value of a property, in my opinion.
I think after we've had a second look at those properties, it should be matching sales. So prior to when we had the higher rates in there, then yeah, that certainly, there was something out of whack on that.
Sure. And sir, can you introduce
Yeah,
yourself to
thank
us?
you. Yeah,
And,
Yeah, sorry about that.
No, that's
There's
okay.
this
No,
guy.
I was just waiting. I'm quiet by nature. So, good evening, everyone. My name's Mark Link, L-I-N-K. I'm the regional manager for Tyler Technologies. And just real quick, my background is over 30 years in the business in 3 states, but focused here in Wisconsin since 1992. Just to reiterate a couple of things that Jason had mentioned. The last time that the city actually went through this process was 1996, I believe, where it was a full, go through every property, do a full detailed analysis, and do a revaluation. And that's why you're seeing the shock and the impact of the differences in the values. From a ceiling level view, when I look at the number of open book accounts, and I've been involved in over 500,000 parcels in my career, the 190 open books, we have the 200 re-notifications, or by the way letters, as they were referred to. But when you look at the 191 open books, and the fact out of 1,700 properties, and the fact that this process had not been gone through in 20 plus years, those are real numbers. There's nothing, from my perspective, that reaches out and says, hey, something's wrong. If something were really wrong, there would have been more than 200 property, 190 property owners in here during the open book process. Secondly, a real good item is the fact that everyone that wanted to be heard during the open book was heard. Even if the hours were extended, if the days were extended, if they didn't contact someone initially, they were all heard, and they were heard in a professional, respectful manner. So there were a lot of good things that came out of this reval. As Jason mentioned, there was a good education process for the commercial business owners in the city. And again, looking at the numbers of the number of the informal appeals and the Board of Review appeals, in addition to the fact that the 2019 market is the highest market that we've had in 10 years, all of this came together. So in summary in that, I feel good, not that there's not a couple of gotchas out there, there's always going to be some exceptions. Property owners that you're mentioning that would come into Jason's office, if it's our staff or Jason's staff, they're going to be heard. If they present that, hey, I have 50% vacancy, we'll look at that and make some consideration to that. But if you do look at the sales and the values that are getting generated from this income model, because we do look at the sales before we even start that income analysis, by and large, things are pretty sound here in the city with the values that we generated. And I can't overstate enough, again, the total redo based on the time frame since it was the last full interior revaluation. And I'm open to questions. Thank you for your time.
And I have a question for either one of you. On the Board of Review summary on the last page here, it says 25 cases have been settled through the Board of Review waiver process. What's the Board of Review waiver process?
Okay, so so we had 61 property owners file an objection to their property through, and that gets them on the agenda to go to the Board of Review. Oftentimes.
That's after the open book process.
That's
of
after
course.
the open book
Then you go
process.
to Board of Review. Yep.
Right. From the time that they file to the time of their hearing, oftentimes they provide additional information. And so if that information that they present helps us fine tune their value, we can do that. However, once I sign an affidavit and affix it to the roll, I would be impeaching myself if I change the value. So, the process to resolve that is to sign a waiver with the new value, present that to the board. They approve it, and then it gets changed on the roll.
Okay. Thank you. Any other, Alderman May?
Sure. So it's been 23 years since the last reval. I think last year when you came, was it last year or a year and a half when you came before us and you showed us the percentages and how out of whack things looked? I don't think this really surprises me much. The big question I have is what's the percent change in assessed value then that we're expecting
So,
from over last year's?
so if you go to the last page here, I have a summary there.
Look at that.
So if you start down here in the box of total, the total assessed value of the city, as of today, we still have a few board cases to get through, but as of today, it's going up 4.56%. So we would be adding $166 million to the tax base. And so that 166 is made up primarily of the commercial. So if you go up a bit, you'll see that.
Commercial land.
Yeah, see, well, I can get into the details, but commercial is $165 million increase, almost 14%. You'll see that residential went up 13 basis points. So, you know, that is pretty much, I think we had 3 new homes, and then the rest of it is permit work, like kitchen remodels and
And that's single families only?
single family and duplexes.
And duplexes.
Personal property, you can see went down, and that is the continuation of machinery meeting the definition, or personal property assets meeting the definition of machinery, which is now exempt. So, now that the state has issued that new definition, a lot of people had been moving these machinery assets to the exempt column. So that's how it's being reflected. If you go below that box, you'll see how it's allocated between TID and non-TID. So our TID saw an increase of 42.6 million, non-TID real estate value 126 million, and you'll see that that adds up to the increase of 168 million in real property. And then down here, you'll see that I allocated it by tax classification. So in 2018, residential bore approximately 65% of the tax burden. This year, if this holds, then, you know, they're gonna be looking at bearing about a 63% burden of the levy. So in other words, residential should see a change. I'll leave it at that, because we don't have levies yet.
Mr. Chairman.
Yes.
Now, next year, we're gonna be doing the same thing with residential, or?
So with residential, I'm gonna be asking for funds for next year's budget to begin the work, but the reval wouldn't be for 2021.
And you're gonna do the same process, starting from scratch?
Well, for residential, the property, you haven't had a full reval since 1978. So,
You're gonna ask to go into everybody's houses?
we're gonna ask.
It ain't gonna work, but, you know.
We're not gonna get 100%, you know.
People have a right to refuse, but then comes the
Well,
validation
you
period
may
where
get-
they
you may
say,
get 10.
"I'm too much." And then,
Right.
yeah, they show info then.
Okay.
Since
All right.
70 what?
Alderman Weigel.
I just wanted to bring up some of the conversations that I had with property owners, and especially the small businessmen, and I'm a small businessman, you're a small businessman. A lot of small businessmen think the government already knows too much about what's going on. And especially in these owner-occupied buildings. And that's why I can see, I mean, what's the typical compliance rate on that 3-year? I mean, what's the typical compliance rate versus what was our I'm curious how.
Typical is 15 to 18%.
Oh my gosh, we got like 60% almost.
61.8%.
So we didn't.
No, with the INEs? With the
Oh,
income-
with the INEs, I was
I'm
talking
sorry,
about
you were
the,
talking about the income statements,
Yes.
correct? Yeah,
Oh.
yeah, so with the income statements, it's, yeah, typically around 18%.
right.
But we got 61%.
That, well, the 61% was for, interior
Interior.
inspections.
Interior inspections, okay. So what about all the cash flow stuff?
I was expecting 10, it came in around 18%. so.
Okay. The number I didn't know, actually.
And,
So-
and obviously on residential, there's no cash flow. It's gonna
Right.
be-
Residential is gonna be based on sales.
Okay. All right, any further discussion? All right, this is a communication, kind of a motion to place it on file.
So moved.
Second.
I have a motion and a second. Any further discussion? All in favor, say aye.
Aye.
Opposed? Ayes have it. I have a motion to adjourn.
Second.
All in favor, say aye.
Aye.
All right, we're adjourned. Thanks, everybody.
Thank you for everything.
Yeah, yeah, thank you both.
Yeah,
Right.
been very-
Sure.